We've made strong progress this year in implementing our growth strategy. If I start with our Rail Technology and Services division, we've delivered really strong both organic and acquisitive revenue growth, both in the UK and North America, and that has been supported by a good increase in annual recurring revenue, which is a really important part of our growth strategy. The growth has really been underpinned on the rail technology side by the delivery of 3 complex SaaS implementation projects. We've got a number of those to deliver in the coming year, but they give us a great platform to continue to build that side of the business and grow our revenue. What's been particularly pleasing has been the revenue growth in North America. Post the end of the financial year, we have rebranded the business as Tracsis. That's had a great market reaction. We're seeing a really strong growing pipeline of opportunities in that market, and that positions us really well for the future. On the other side of our business, which is data, analytics, consultancy and events, we've seen a record year. That has been driven by a number of different factors. One of those has been the record performance in traffic data and events, which have now been integrated into a single business under a single leadership team. We're seeing really strong interest in our data analytics and GIS activities, particularly now from the rail industry, which is asking some fantastic questions about what we can do with all the data that we take on a daily basis from both the train operators and from the infrastructure providers. And then we're also seeing a really good demand for our specialist consultancy services. So the team has done an outstanding job this year, and that gives us a great platform for growth moving forward.
We're pleased to be reporting another year of good financial performance for the group, characterised by high levels of revenue growth and continued strong cash generation. Our revenue in total increased by 19% to £82 million, and that includes double-digit growth in both divisions. Organic growth overall was 10% for the group, and that was supplemented by a strong contribution from our rail technology business in North America. And one of our key strategic goals is to grow annual recurring revenue, and our ARR in rail technology and services increased by 9% to just over £23 million. On the back of that revenue growth, adjusted EBITDA increased by 13% to £16 million. And the group continues to generate good levels of cash. So our free cash flow generation increased from £5.8 million last year to £8 million this year. We finished the year with £15.3 million of cash, and we have no debt. And importantly, we've now completed all of the material, contingent and deferred consideration in respect of historic acquisitions. So there was a total cash outflow of £9.6 million this year, but that leaves us now really well positioned to continue to invest in driving both organic and acquisitive growth as we move forward.
Digital transformation is key to the rail industry's future, and there are 3 key areas that will affect Tracsis's future growth and our growth prospects. So the first of those is around the role that digital transformation will play in delivering a data-driven, customer-focused and safety-critical rail industry, and that's applicable in all global markets. And the Tracsis product offering is really well aligned to delivering those outcomes. In the UK, Network Rail has just confirmed that it's had approved £43.1 billion of funding for Control Period 7, which starts in April 2024. And this is going to be focused on improving train performance for both freight and passengers. And again, that's a really strong alignment there with the Tracsis product offering. So in summary, we have a very large order book and we have a growing pipeline of opportunities in both the UK and North America. The second point is around government change. So we expect there to be general elections in both the UK and North America, 2 of our largest rail markets, in either late 2024 or early 25. We don't expect a government change to have any impact on our long-term growth prospects. And why do we say that? That's because efficient and effective public transport is a core element in ensuring any government can deliver its decarbonisation and sustainability agenda. And we remained really well set to be able to provide the solutions that the industry is going to need. And the third factor to consider is the outlook, particularly in the UK market. So since the COVID pandemic, we have seen quite a lot of uncertainty in the UK rail market, as we've seen a slow return to passenger numbers, and we've also seen ongoing industrial action. In addition, we've also seen a lack of clarity around the implementation timing of Great British Railways. We have a great order book. We have a growing pipeline in the UK. We're very confident in the growth prospects, but there is a possibility that some of that growth will be weighted towards H2. And in addition, that's also going to be reinforced by the transition we're seeing in the North American market towards an increasingly SaaS-focused model, which is clearly something we absolutely want because that drives an increase in annual recurring revenue.
We're really pleased with how we're performing in North America, having entered that market through acquisition in March 2022. In its first full year of ownership, that business delivered almost £9 million revenue contribution, which is a really strong performance. And encouragingly, we're seeing a fast-growing pipeline of opportunities in that market. Tracsis operates in North America as a mid-market competitor, and we see that as a real strength. The feedback we're getting from customers is they are looking for new entrants in the market that combine both the technical capability to deliver innovative digital solutions, but also the scale to become long-term partners for customers. And that's exactly what Tracsis is all about. To help us to access these opportunities, we have invested in this business during the year, enhancing the leadership team and in particular growing our sales and commercial organisation. We see three key growth vectors for us in this market. The first is in computer-aided dispatch. Importantly, this year we completed customer acceptance testing on a new product in this market, which opens up a new range of opportunities for us in the transit space. That product will be fully implemented during 2024. We continue to see a number of opportunities with ports and industrials in the yard automation space. And when we acquired the business, we identified remote condition monitoring as being the first product area that we could bring across from the UK into the North American market. I'm pleased to say that we're making good progress there. We have a number of trials underway and a growing pipeline of opportunities. We've taken a number of steps this year to further integrate the group, to enhance our capabilities, and to work towards building a more scalable platform for future growth. Tracsis's origins are from a very successful and largely self-funded buy and build model. And one of our objectives as a management team is to build on that strong foundation, but to really bring the group together and ensure that we have got a scalable platform for future growth that allows us to grow both revenue and margin. A key step this year has been reorganising the business around 4 verticals based on common operating models. And that's important not just in simplifying the group, but it ensures that in each of those verticals we've got a clear focus on how we deliver strategic growth. As part of that, we've fully integrated our traffic data and events management businesses. They're now managed by a common management team, and as well as delivering operational improvements, that gives us a common focus around improving health and safety and also decarbonising our vehicle fleet. As well as simplifying our organisational model, we've made targeted investments in enhancing our core capabilities. That includes around how we deliver complex SaaS implementations, as well as growing our commercial and sales organisations in both the UK and the North American rail markets. Having made that progress during FY23, we've now started a programme of activities to complete the transformation of the group's operating model. And what we mean by that is having a fully consistent and aligned approach to how we develop and deliver our technology solutions. The objective here is to make sure that we have a model that is both faster to market and also more repeatable. And that will help us to access accelerated revenue growth and ensure that we get the margin improvement coming through as well. In order to deliver that, we will be taking actions during FY24, including rationalising our operating model, removing duplication from the business, and investing to improve our systems and processes to match the anticipated rate of growth going forward. In order to achieve that, we will incur approximately £2 million of exceptional costs, and those will be more weighted towards the first half of FY24.
We remain really confident in the long-term growth opportunities for the group. Our rail software pipeline continues to grow across passenger freight and infrastructure sectors and across all geographies, which is a great platform for future growth. We therefore expect to see strong organic growth across our rail technology and services division in both the UK and North America next year. We do expect that growth, however, to be slightly weighted towards H2. However, we've got complete confidence in delivering our full year results in line with expectations for FY24. So there's a number of key areas of focus moving forward. The first is continuing to invest in R&D and new technology to continue our reputation as being the thought leader across the industries in which we operate and being first to market with new technology solutions. We will continue to transform the group to continue to simplify our operating model and move ourselves towards a fully integrated set of business processes and tools, which will enable us to drive increased future profitability. We didn't complete an acquisition this year. However, M&A is central to our growth strategy moving forward, and we're continuing to look at extending our rail, software and technology footprint in both the UK and international markets. Sustainability is fundamental to the Tracsis business and is a reason why we're able to retain and attract talent into the organisation. We're making huge progress towards our carbon neutral target of 2030, and we'll continue to invest in the ESG priorities to ensure we can meet our obligations. We have a great team. We have some fantastic products. We have some fabulous long-term relationships with our clients, and we have a really exciting future ahead of us.